Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's Justin Nielsen here, and I'm joined by Ed Carson, our IBD news editor. We've got some interesting action to go over with you. It's May 16th, 2023, and a lot of mixed results depending on what you're looking at. We'll take a look at a few stocks, including ON Holdings, AMD, and Axcelis. But let's first take a look at the indexes, Ed. We got the S&P 500 ending up finishing down 0.6%. The Nasdaq Composite was trading positive until the very end, and that's now down 0.2% at the close. Nasdaq 100 ended up just up about 0.1%, while the Dow Jones Industrial down a full 1%, and the Russell 2000 even worse, down about 1.4%. So, what was your take on the day and that last minute sell-off?
Yeah, I mean, for much of the session, MegaCaps and some chips, and there's some overlap there, they were leading the NASDAQ, keeping that fractionally higher while most of the market was down. So it looked like a pretty weak day outside of a very narrow area. Then right at the close, there was headlines that basically said that President Biden was going to cut short a trip to Asia, which just suggested that there's no real breakthrough on the debt ceiling and just raising, oh boy, it's more serious. So that gave it just a little bit of punch to bring the NASDAQ down, but really the breadth was extremely weak, and it's very divergent. There was real divergence. Sometimes we talk about narrowly mixed, where the Dow was down 0.1%, the NASDAQ's up 0.2. This was not narrowly mixed. There was some pretty big divergence, and that's been, it's been continuing for a while now.
Yeah, we've been talking about that for a while, how if you're looking at the market weighted indexes, you're looking at one thing. If you're looking at the equal weighted indexes, you're looking at something completely different. And it just seems like it's adding more and more confusion. I mean, not to mention that we still have, again, debt ceiling fears, recession fears, inflation fears, fears of this, fears of that, it seems like. And I mean, while earnings season is mostly over, we're still getting some earnings out there that are knocking things around, as we'll see in a little bit with the shoemaker ON Holdings. But let's take a look at the Nasdaq Composite real quick. As you said, this is something that has been making some steady progress forward, but we're at highs for the 2023 year. But is this something to really be excited about?
Well, look, if this were the market, if this reflected the market, the breadth, the diversity, we'd be pretty happy. We're at the highest level since late August, and that's nice. But it's so focused on the cues, and we'll go into it more. But this is fine, but just about everything else looks worse. It's you have to look at all those features.
Mm-hmm. So, I mean, we might as well, since we're on the NASDAQ, just kind of do the drill down, and we can look at the Qs, which is the NASDAQ 100. These are a little bit stronger because, of course, the NASDAQ 100 takes the top 100 of the NASDAQ composite, but takes out the financial stocks, which, I mean, that helps when you have a banking crisis to take those out. So this has looked a little bit stronger, but if we compare this versus QQEW, which is the equal weighted, you do get a little bit of a worse picture. I mean, it's not at highs. It's right there at its 200-day, the 50-day moving average line. So not nearly as strong looking as the Qs themselves with the market cap weighting.
Yeah, and this was showing an encouraging move here. I mean, you could say, like, if we could just get another day, another strong day, it would at least look almost like one of these early entries bouncing off the 50-day line. So again, this doesn't include financials. This is mostly tech companies, and that's been doing better, but right down there, it's still holding the 50-day line, but not leading either.
Right. Now, if we look at the S&P 500, which, I mean, look, it's got the oil and gas in there that's been struggling, the financials that were struggling. So still, it's been holding up. I mean, we're right there at the 21-day moving average line for the S&P 500. But if you look at the equal weighted on this one, RSP is the ETF that we usually use here. I mean, this looks like a very clear downtrend.
Yeah, and this one is the lowest close since late March. This has been trending lower for a while. In fact, it's now just a couple pennies below. It's now closer to the October lows than to the February highs. Mm-hmm. And that is just a real sea change compared to the NASDAQ 100 or even the NASDAQ. It's pinned below all its moving averages, can't seem to get above that. And so that's where you're seeing this kind of broad weakness. And you can look at all sorts of metrics, but this really exemplifies how weak the breadth is in the market.
Yeah, and so two of the things that two of the symbols that we use on MarketSmith, if you're looking at the Nasdaq, we use GMIAB, which shows us the advanced decline line on the Nasdaq. Again, pretty clear downtrend there.
And this doesn't include
Decliners.
today. That's going to get a
Yeah,
big drop
right.
down. This was like 3-to-1 or 2-to-1 drop today.
Yeah, and then of course on the NYSE it's GMIAA, which was looking a little bit stronger, but as you mentioned, I mean it's not including today, which is going to look a little bit worse for that. Let's go ahead and just kind of round out the discussion. Dow Jones Industrial Average that got hit by over 1% and back below the 50-day moving average line.
Yeah, again, once you get away from the Nasdaq 100, it's becoming more and more clear as you know, it's like more and more of these are just showing this weakness, not finding support. So not great to see this.
And then over at the small caps, IWM, which is the iShares Russell 2000, a strong day yesterday, largely because of banks kind of rebounding, but it was the strong day yesterday was a weak day today.
Yeah, and banks didn't do well great today, but they weren't really leading the decline. They were holding up for a while when the Russell was weak to begin with. So they just sort of slid at the end. This just can't get above its 50-day line. And again, just shows you that problem there.
Hmm. So now let's go ahead and kind of touch a little bit on. We've got a few things to look at here, and we were kind of talking about how the headlines. Man, if you were given the headlines ahead of time and said, okay, now what do you think the stocks are going to do? It just seems like the headlines aren't giving you any advantage right now, because here we have this debt crisis fears. You would think that would have an effect on gold, but if we take a look at what gold is doing, GLD, I mean that got hit pretty hard today.
Yeah, it got hit pretty hard, and it's been trending lower the last several days, you know, and it's not GDX. That's
Hmm.
coming down even more, which is not unusual. The GDX tracks the miners, and that tends to have more of a flow. Part of that's the dollar strengthening. I mean, for all the thing is like America might default, but that sends people as almost like a safe haven. It's a strange environment. I mean, there's things going on. It's like running to danger almost for safety. But this is so if you heard the headlines, we might default. You'd say that's a great environment for gold, and yet that's not happening right now. It is, but that's just something you have to. You know, sometimes what seems like the obvious thing, even when you know the news, is not obvious.
Yeah, and then on the 10-year Treasury yield, looking at 0 TNX, that's kind of rebounding a little bit, got back above its 50-day moving average line and right at its 200-day. A pretty strong move the last 3 days.
Yeah, I mean, it's still sort of in a range, so it's hard to get,
Mhm.
you know, in that kind of thing, but some stronger economic data in the US. And mind you, another thing balancing out, there was weaker economic data in China. So that could be part of the reason why we're seeing a stronger dollar versus that. There might be some debt ceiling talk issues here too. It's hard to tease all that out. It would maybe if we see a real spike, like if we really get to the limit, you know, almost to the limit, that's when you might see some real gyrations that are obvious.
Yeah. Now, taking a look at some of the other ETFs, we have XBI, which is often, we look at this as a kind of a measure of the biotech area. Biotech's hit a little bit hard today because of some news of some acquisition blocks, right?
Yeah, the FTC moved to block Amgen's proposed takeover of uh, Horizon Therapeutics, and you can see how this tumbled. And it's not just that one move, but you know this is not usual for them to do that. And the language they used and the reasoning could be used to block a lot of mergers, and so a lot of buyout buzz, and so some various other stocks that are in takeovers, or you might think could be buyout takeovers. All of a sudden, that possible valuation might be taken out a little bit. So that could be an issue for biotechs for a while.
Right. So in addition to Horizon, Seattle Genetics, or CGen as it's now called, was taking a hit, and Shockwave, which there were kind of those rumors. We've been looking at that one, SWAV, and that was down a little bit, but recovered quite a bit. Ended up flat for the day. So yeah, kind of a mixed bag there. But then you have like Eli Lilly and some of the bigger ones that were weathering the storm just fine in terms of some of those big drug makers. um yeah, What about in the tech sector? You talked a little bit about the strength of chips. So SMH is usually what we're looking at there. We noted in yesterday's SMT, this got back above the 50-day moving average line, was making some progress earlier in the day, but kind of fell at the close.
Yeah, it did. And that's a little, I mean, there's some strength in AMD and NVIDIA and chip gear makers, some of the chip gear giants. Those have been doing well. So this came down, but honestly, that's flat. For given how much weakness there was elsewhere, this isn't bad. And I wouldn't say this is a broad base across the board chip rally, but it's
Right.
not just AMD. It's not just NVIDIA. You also see some EV chip makers. You have these chip gear makers. So it feels like there's at least like maybe a dozen names that you'd say, oh, those look pretty good. I mean, that you could pretty easily rattle off, and others are setting up. So, that's a positive sign. I'm trying to look for like silver linings because the breadth is terrible, but at least chips are getting to be a little more breadth in that regard.
Yeah. And finally, we'll wrap this up with IGV, which is the software, tech software ETF. This is just hovering right there at 300, just below there. What do you make of the software area?
Yeah, some of this is Microsoft, which is arguably more cloud and AI than anything to do with software per se, but Salesforce. But there's a lot of other names, ServiceNow, some of the cloud names which may not even be that heavy in this ETF, or at least not that big of a weight. They are coming up. So this is another area. So again, you can imagine, and if you're in the right stocks. I mean, you may be like, why are you guys being so negative? There's a lot of stocks are doing
Right.
great, and so it depends on the stocks you are or how nimble you are. And it could be that if we just have a good day or two, all of a sudden a lot of things will start looking a lot better. We're just not quite there in terms of in terms of breadth.
Mhm. Now let's go ahead and take a look at some of these stocks, and we can start with On Holdings, ticker symbol ONON. This, had such a phenomenal earnings report last time. I mean, skyrocketed up. Was really holding the 21-day moving average line. Nothing really wrong with this one, and a lot of the shoemakers were doing well. But then Crocs had its earnings report. It got knocked down quite a bit, and now we had earnings report for On. At the surface, it looked like a pretty good earnings report. Why did the stock get pummeled like this?
Look, if this stock had gone up 10% anyway, it would have been easy to say why. Okay.
Mhm.
It's all like it's after the fact though. They raised guidance, but they raised guidance by how much they raised Q1, which suggests that they didn't raise guidance for the rest of the year. Maybe that's just not enough. And they also on the call, they said, well, growth is probably going to slow significantly in the second half. Now, part of that's just tougher comparisons, and it's still going to be robust, like in the mid 30s or something in that 30% level for revenue growth. But that isn't maybe what people are expecting, or hoping for, given that's a huge run. So it did find support at the 50-day line or the 10 or right around the 10-week line, may have closed a little below that. So that's a key area, this area. But it's also not that shocking given such a big move and the expectations being high for people really demanding strong growth from companies like this.
Yeah, and I guess the frustrating part is that it feels like, here you have a month and a half's worth of progress that just gets wiped out with a single day.
Hmm.
But I mean, that's kind of the nature of the beast, especially with earnings. Um, Turning our attention over to another stock here, AMD. You mentioned a lot of the chips, and AMD is, certainly one of the better looking chips out there. It seems like once it got back above its 200-day moving average line, and then started holding above the 50-day moving average line, it just really kind of had a different look to it recently. So and we should also mention that there's some pretty nice volume spikes here on the blue side. So that's nice to see. What's your take on AMD here?
Well, I think the time to probably buy was right in here, like on maybe this day, like right there,
Hmm.
because it was breaking decisively above the 50-day line, still pretty close. Nice move today. It actually briefly got above the official buy point. It would have been nice if it could have paused and formed a full handle. Could have bought here. You might be thinking, boy, this is the chance. This is going to really move like an NVIDIA or something else. Uh, but it's also, still fair amount out there from the 50-day line. So it's a tricky situation in that regard. Obviously, there's a lot of enthusiasm about that AI and about data center chips long term. That this is one of the big winners from it. But it's the traditional breakouts have struggled. I mean, and so some have worked because some will always work that blow through, but it can also, that is just a definitely riskier in this sideways range bound market. Uh, and if we have sector rotation back out of chips again, that, probably will not be great news for AMD, even if the long-term prospects are fine.
hmm Now, for a while there, it seemed like AMD and NVIDIA were kind of just going back and forth in terms of who had the best graphical, graphical chip, and NVIDIA certainly seems like it's been winning the battle lately in terms of just looking at the stock price. So, um, do you do you make the decision like, okay, NVIDIA's out of there and it's too extended? Do I go for AMD, or is it better to wait for NVIDIA to give you a pause and give you another chance?
Yeah, that's always a tough question because sometimes the leadership does change, and maybe AMD is poised to go on a solid run here while NVIDIA will consolidate for a while. NVIDIA has earnings next week, so that could be important for both of these names and maybe a lot of other AI plays. But yeah, so that's a challenge. If you do play this, I think, early entries are usually the way to go, and smaller positions. I mean, Joe Fahmy was talking about a lot of the things that he talks about in this tough market, but smaller positions,
hmm
focusing on leaders, and this seems to be a leader. So that is definitely a positive in this one.
Yeah, definitely one of the things that we look at is the relative strength, and that relative strength line getting to new highs, that blue squiggly line there, and also the relative strength rating, 89, meaning that this is outperforming 89% of the stocks in our database at the moment in terms of a 12-month performance. Let's go ahead and wrap this up with ACLS Axcelis. Now, this is also in the semiconductor space, and man, when this had a really nice move, it was holding above its 21-day moving average line, everything looking great. And then it seemed like, we got some volatility in there. And then once it crossed its 50-day moving average line, things were looking a little bit dicey. But here we are, a nice rebound since then.
Yeah, and I didn't mention it's like AMD tumbled after its earnings and then rebounded, and the same thing happened here. I mean,
hmm
it was like this was ugly. Yeah, it closed okay, but falling 7% after earnings after already breaking down below the 50-day line, not great. But it after that, it's been strong, coming back up. I mean, chips in general have been coming back up. It broke above a 50-day line, and while the volume isn't tremendous, it sort of extended that again. It's stronger volume than at least a few days, so you could use this as an early entry, from the 50-day line. This isn't that hot EV play. It's now consolidated. There are elevated risks with the market, but that this one is looking better after being, as you say, very volatile and extended for quite a while after a big run to start the year.
And it's certainly worth taking that step back on this one and taking a look at the weekly chart to just kind of see where ACLS is in relation to its all-time trading. I mean, it's up there. I mean that pullback that it had looks fairly minor in comparison to the
Hmm.
move that it's had over the last few years. And again, this is one of the few stocks that you can say is at highs, whereas a lot of stocks are still looking at a lot of overhead supply from their peaks in 2021 or 2022.
That's a really good point. There's not a whole lot of people who were that upset for buying this stock. And another thing is that if you don't want to buy now, you could wait to see if a handle forms, or see, and but this is one that has pretty strong growth prospects, and it's actually not that the valuation isn't that high when we think some of these growth names, and it's gone on a good run, and it's really not that expensive. That wouldn't even so. It's almost a value stock in that regard. So another point in its favor, perhaps.
Yeah, not normally, which we look at chip stocks as value stocks, but there it is. When it happens, that can be some magical moments. Well, thanks a lot for that analysis there, Ed. And as a reminder for folks, we're going to be back on in the morning. It's going to be me hosting while Allie's gone, so I'm going to give my shot at that. We had Joe Fahmy on today for IBD Live. David Ryan is going to be on Thursday, so lots of great guest commentary as well. That starts 10 minutes before the open, so 6:20 Pacific time, 9:20 Eastern time. And you can always go to investors.com/IBD Live to take a test drive of that and see what we're talking about. We go a full hour and a half usually into the market open, talking about what stocks are setting up, how the reactions to earnings are, economic data as it comes out. So if you'd like, please join us for that. And we'll also be back here tomorrow. It's going to be Ed and Ken sitting in the chair for the Stock Market Today video. Thanks for watching us today, and we'll see you tomorrow. Bye now.